Jim, the speech you gave, you talked about the fact that inflation has been missing the target for 5 years now, and that it's about 4.5% below where it would have been otherwise. We have a chart we threw together. It's not exactly like the chart you included in your speech. It's hashtag 8948, and it basically shows volatility and inflation, the core, the headline, going back to 1995 through 2012. Is the Fed at risk being blamed for missing the inflation target, for not letting the economy grow fast enough because it's been missing that target so badly the last 5 years when the economy's in recovery? It's past the Great Recession, and the Fed's talking about more and more rate hikes.
Yeah, I did put this price level chart in my speech. The trend I like to look at is the 1995 to 2012 trend in the U.S. I like to start in 1995 because that's about the time where the consensus formed that we would target 2% inflation. And as of 2012, when I originally used that chart, we were actually right on the price level path, and that gave me confidence that we had pursued a pretty good policy. And of course, right after I gave that, the price level started to fall off the path, and in the last 5 years, we've drifted lower because inflation hasn't met our 2% target, and now the price level is almost 5% off the price level path. So if you think that price level targeting is optimal monetary policy, which is what a lot of theory tells us, it doesn't look as good today as it did when I first started talking about it in 2012. So it made me a little bit concerned, a little bit worrisome that we're off that path.
Is there a risk?
Jim,
I just want to quickly follow up. What is the risk of not getting back on path? What is the risk of raising rates so much? Are you saying the Fed could help tumble us over into another recession? What is the Fed playing with here? Is it fire, or is it just something they should be thinking about, or you should be thinking about?
Well, I mean, if you're price level targeting, you would like to get that price level back on the path, which would mean inflation would run a little bit above 2% for a while to offset the period where you ran below. And, people on the committee have talked around this in speeches in various ways. But this goes on for 5 years and it starts to add up. It's one thing if it's a couple quarters and then you have some quarters above target, but this is quite a while below. I myself was expecting that with all our firepower that we would be able to hit the inflation target sooner than we have, and that we'd possibly overshoot for a while. So far that hasn't happened. So now that we're in a tightening cycle, the concern would be that you push the price level even further below the price level path, and that would not be the best policy.